Hey traders, it's June 14th, Saturday, and markets are closed, but everybody knows about what's going on in the Middle East and how it's creating some volatility again. And let's talk about that as far as on a technical standpoint. Just going to the daily, you know, these these geopolitical events or even national political events, they still respect the technicals on the market charts though. Um, and for example, I mean, there's the 20 20 mine's at like 21, but I mean, it nicked it almost perfectly, before it bounced. Uh, Almost had a 70. Yeah, I mean, I think it got all the way up to here. It had a 70, it did the 76% retracement. So, I mean, when I saw that, I was like, holy, and that's just, again, goes to show you the strength of the market still. So, we'll see what happens tomorrow and how Sunday futures open up. Unless we go full nuclear, um, it's probably gonna respect these levels, and you know the show must go on, so to speak. So that being said, with this touch of the 21-day moving average, um, and a rinse out of one, two, three, four. Look, I mean, I think it didn't quite get wick below this, but obviously one, two, three, four, five, six. The 6-day balance was shaken up, and the next thing is the 10-day balance. If we go just around numbers, so that would be 7, 8, 9, 10. So the 10-day balance is back here. So let's go ahead and set the Fibonacci to back to this May low. And if we do the 10-day balance, it's going to be right in the middle of this. I call this the support to breakout zone. This is your 38.2. This is your 23.6. I bump it down to 21.6. So anyway, if we get a wick below this 58.52 level, I'm a buyer for a bounce. It's rinsing out the 10-day balance in correspondence with this buy zone area. So there will be a bounce here, probably 25 to 30 points. And then you're going to go I mean, you could go from this 58, 56. It could be a 70-point bounce all the way back up to the 21. So I'm looking to trade that. And then if things get really ugly, which I just don't see it in the chart I mean, this is just a massive move of just zero volatility for 2 months almost, which happens. But if I just do all the way back to the low, then my next level would be this 5603. I know that's a long ways away from 58.55, but but that's the 61.8% on a major, major, major move. Because of the strength of this market, I've seen a lot of bounces, and I don't use this. I only work on the 61.8 and these levels because of I find the 61.8 to be of even though they will bounce off these levels, I just find that for me this is just a much more reliable level to get actually some kind of a bounce off of on 10 days, excuse me, on just time frames, even intraday time frames. It'll line up with, you know, the 220 moving average or the 1520, and just I just find it works for me. Plus, there's just so many things to pay attention to that you can't just pay attention to everything unless you're algos and high CPUs, and they do that, but I can't do that. So um, and that's also really close to where we had this level of 55.21 for a while. That would be really dramatic if it comes all the way down here to 5,600. That'd be like 8% from where we're at right now, which would be pretty dramatic. So I just don't see that happening again unless we go full nuke, and I don't see that happening either because no one really wins in that. Everyone is a loser. So I am going to draw the the 0% fib at this 5,500 level, and look at that. That 61.8% lands really similar to where I had this simpler Fibonacci, and I was talking about this buy zone area in here at that 58.52. So yeah, this area between 58.53 and 58.61. 58.53 and 58.61. I'm going to say it again. 58.53. Let's just call it 58.50. Let's call it 58.47. Excuse me, 58.49 to 58.64. That is a very highly probable dip bounce area if we get some substantial volatility. And again, why? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That would take out the 10-day balance. The 5-day balance has already been mixed up. That would take out the 10-day balance. It would also rinse out any buyers that it would also rinse out substantial 21s, but it corresponds substantially on the 61.8% and the buy zone between the 22 and the 38. So this is going to be a major level that there will be a bounce opportunity in here in the next couple days if there is some massive volatility. If there is not, then I would maybe look at this 5,900 area as a kind of a dip at the 5,902. It may not make it down past below 5,900. And since this 21's already bounced off, we're going to need to look at just that being the low, given the strength of everything, which means that we're going to need to check out, and how did this go on Friday. Yeah, it's respecting these levels. I mean, we had just, I mean, just a massive trend trade off the lows. Nobody really cared. And then just a massive bullish trend trade the first couple hours of the morning. It was just a 10-second trend trade on up. And we obviously got some news there midday, and but still bouncing perfectly off that 38.2%. So we'll want to see if it even breaks below the 59.26. If we get horizontal and it holds 59.52, then look for trend trade back up. So it's respecting these fib levels. I'm not going to have that on there because I am expecting some volatility over the the Sunday futures open. But again, this goes to show you that the fibs are being respected, and the market is bouncing at at predictable levels. So look to get back in this market, look to buy the dips and the bounces, take some short-term profits. If you are looking at this on some swing trade accounts, IRAs, retirements, other trading accounts, I can't swing trade in these futures accounts with the programs I'm in. So I'm just looking at these bounces. But I do have programs in for respectable other symbols like the Qs and the U and the SPYs and stuff, and some of them bigger high betas. But yeah, we got a massive uptrend in the 21-day moving average. So buy the dip, trade them well. Talk to you later.